Wall Street's wrong again. Let's take a look at Roku's big Amazon-based day and what that means for the stock.
But Wall Street's take on Roku seems to be really confused. They can't figure themselves out. And if you look at it, maybe there's a lot more upside than you might think.
Stock earnings and favorite pastime.
So let me just say, earnings
Wall Street has 2.5x
because their compensation goes up.
Wall Street's wrong again. Roku popped over 10% earlier this month on big news. That big news was it's partnering with Amazon. Amazon is going to sell ad content into Roku's entire platform of streaming. You know, you might not realize this about Roku, but Roku controls 39% of the US connected TV market, right? When we think of streaming, we think of Amazon Fire Stick, we think of Apple TV, but what you don't realize is Roku, between Roku's, right, the actual streaming kits, and also Roku OS, which sits on all of these TVs, many TV connected TVs use Roku's platform. It has a dominant market share. But anybody who's used streaming, and I cut the cord, Joel, I think 10 years ago, you and I were joking about this earlier this week. I always talk about the idea the ads are terrible. Literally, the ads are atrocious on connected TV. And the reason why is because they have not optimized for it. So you think of Roku and anybody else, they are not doing nearly enough to be able to do this. So this is a big deal for Roku. And on that news, Bank of America announced they were upgrading Roku's stock price target, right? They're saying Roku is not going to be worth $85 a share. It's going to be worth $100 a share. So just put that in context for Roku. Right? If Bank of America really thinks this is transformational for Roku, and they literally they talked about this idea that this for Roku on the connected TV footprint that it has means they're going to unlock a tremendous amount of value because they're going to be able to get the ads from Amazon that Amazon's in place to be able to sell a whole bunch more revenue into their business. Well, if that's the case, then why is Bank of America only calling for the stock price to be up basically 20% from current values? So let's talk about this because this is a classic example in our view of why we think Wall Street has gotten it wrong again on Roku. Let's look at Roku for context. On an as-reported basis, Roku does not have good profitability. Roku's return on assets has basically been negative almost every single year. You can almost understand why Wall Street's kind of like, maybe we don't want to have such an aggressive target in terms of upside for the business because it's just not a great business anyways. But if we look at it on a uniform accounting basis, we can see is Roku's already a pretty profitable business. Look, right, 2021, of course, banner year for Roku because it was for everybody who was involved in the at-home revolution. But even after we saw the slowdown in people just sitting at home and only streaming things and having nothing else to do, Roku's still been a really good business with return on assets around 10%. For context, corporate average return on assets around 10 to 12%. So on a uniform accounting basis, they're slightly below average. Well, here's what Wall Street analysts, including Bank of America, are pricing Roku to do the next 2 years, right? This deal with Amazon kicking in, that they're basically saying, hey, Roku's going to be able to finally monetize that 39% footprint that they have that is going to potentially unlock a lot of value. We could see return on assets rise from 10% to a little bit above corporate average, right? 13%, 14%. So
it's like it's 39% of installations, but it's an even higher number in terms of total percent of streaming that is owned by Roku. In terms of usage, the 39% installations reflect even higher usage levels than Amazon Fire Stick and others. Rob, I want to ask you a question because the analysts are expecting this to be very good for Roku. Look at that increase in profitability based on the analyst forecast. Why is Amazon, if Amazon has Fire Stick, why are they doing a deal with Roku as opposed to just saying we're going to keep everything for Fire Stick? Are they giving up?
Yeah, right. No, not at all. And this is important, everybody. The best analogy to make for this is Google, right? Google doesn't just sell ads and place ads on Google and YouTube. Google wants to be the ad provider for everyone on the internet because that means Google gets the most supply of ad space, therefore it gets the best demand and actually gets the biggest marketplace, makes the most money. Amazon's doing the same thing. Great question, Joel, here in terms of what's called being basically a demand side provider. In terms of being a network, they want to make sure they have the biggest amount of space to place ads in on streaming platforms. So being on Amazon, having their Amazon Fire Stick and now having Roku makes them even stronger. It's actually really the best analogy to this would actually be Microsoft back when they were just first starting to launch their ad business with Bing back in 2008, 2009. Microsoft went out and they actually signed up Facebook right at the time to basically sell display ads on Facebook, because they said, we want to get as much basically capacity as possible so we have reasons for advertisers to come to us to sell their business. And that's what Amazon's doing, everybody. This is not Amazon declaring it's done. Really good question, Joel. But here's a really interesting thing. Here's what the market's pricing in right now, right at $80 to $85 a share for Roku. The market is giving Roku no credit for the potential for it to really transform its profitability. And here is all that at $100 stock price that Bank of America is selling, that is putting out there. Here's what Bank of America is telling in terms of what they think Roku can do. That's way below what they are saying. They're saying this is transformational for Roku, and yet they're basically saying return on assets really is not going to be above basically 2025 levels in corporate average. This could, because it finally lets Roku monetize its business, be potentially transformational. So if you believe what Bank of America is telling you, you got to believe that Wall Street's wrong. But I'll tell you why Wall Street's wrong. The reason why Wall Street's wrong is one of the three famous averages. Let's take you all back to what probably, Joel, I guess this would be like 7th grade math. There's three different kinds of averages, everybody. We all talk about the mean and we all talk about the median, right? There's a third average, which is the mode, which we don't talk about as much, which is the number that appears the most often. In Wall Street, your biggest risk is not being part of the herd, because if you're not part of the herd, everybody can call you out when you're wrong. Do you notice that the most dots on that chart, those blue dots, are every Wall Street analyst stock price target for Roku? There's like 9 that are at $100, including Bank of America. So all Bank of America is doing, everybody, is they're saying, hey, let's not put our necks out if we're really bullish on Roku. Let's just be like everybody else. And if it gets to $100, then we'll raise the price from $100 to $120, just like everybody else. But if you want to know the truth, look at what the numbers show you. And the numbers show you, if you believe in this for Roku, there's no way that this is possibly that this is all that it could go. Would you say that's fair, Joel?
There's a monster disconnect between Wall Street's pro forma forecast for the profitability of the firm, which they're correctly showing, I think, that it's going to go up, especially with deals like with Amazon, while at the same time having target prices that would reflect the opposite of what they're forecasting in their financials for earnings. It's just another nonsense of all. So which are you supposed to believe? And in this case, we think that they got the numbers right on a detail level. They get the target prices wrong. They're always buy and hold because they never want to anger management. I mean, that's just silly of them, right? The buy and hold targets are completely useless. Right. But we look at the target prices and the forecasts, they're out of sync. And we actually think their forecasts at a detail level are correct. And this stock has some upside.
All right. Well, everybody, that's Roku. And that's today's episode of the Altimetry Authority. If you liked it, hit the like and subscribe button and drop us a comment. And thanks so much. Come back for next time. Thanks, everybody.